Well, hello. I'm fully loaded and I'm going to answer a question on Fibonacci. Roll the intro and I'll tell you all about it. Hi and welcome. I'm going to be talking a little bit about Fibonacci and how to use it within trading. Because one of the YouTube subscribers, and a little shout out to 333333, sorry, I'm not sure where you live to give a shout out to destination, but I do thank you for the question. And if it's your first time here, my name is Langers and I am the Scruffy Trader. And what I'm trying to do is put trading in the real world and also show it in real time. So if you see a live trade from me, it'll be the same day it's uploaded, or certainly the next. And I'll show you the opening and the closing and the P&L. So they're not cherry-picked charts. They're charts that I trade every day to make my living. Because this is how I earn my living. It's my job, you know. So if you like the sound of that, please subscribe. Click the like button. And if you don't like it, because I've noticed that the trolleys are out giving a lot of thumbs down on the videos, please say why you don't like it. And we'll have a little chat about it. Because I'm genuinely trying to help, you know. So I don't mind if you don't like it. But let me know why. And I'll see if I can help you. Can't be any fairer than that, guys. So what are we going to have a chat about? Well, it's Fibonacci. And more importantly, how to use it. Now, Fibonacci as a tool is something I use every single day. And I use it for retracements. And I also use it to help set profit targets. But why is it important? Well, it's always been there. It's one of these strange phenomenons that's been around since year dot. If you look at the Milky Way, that spiral is actually a Fibonacci. And it's all based on what's called the golden ratio or the golden number. And that is 618. Now it's defined in different ways. You'll see it as 61.8, but you'll also see it in an extension as 161.8. But it is still 618, golden ratio. So if you ever hear anybody mention about the golden ratio, that's the level they're referring to. Now the easiest way for me to do Fibonacci, rather than tell you what it is show you. So what I'll do is I'll jump quickly onto the screens and I'll pull up a chart I was looking at earlier today, because I like to use real world charts. So it's in the moment and it's something you can quickly cross-reference yourself. What I will say with Fibonacci before I move to the charts is it isn't 100%, but it is accurate. If you can get it set, the levels are almost set in stone, but they work on higher time frames. If you're trying to use it on a minute chart and a 5-minute chart, as I've seen in some of the videos, there's too much noise, guys, and it just won't work. And the amount of pips that's involved doesn't make it worthwhile. So you really want to be looking at the 4-hour and the daily. And then it'll give you some credible levels you can work to within your trading. So let's jump on the charts and I'll quickly draw in some fibs and show you where they go and how I use them. Come with me. Okay guys, so here we are on the chart as promised, and we're going to have a look. It's standard chart. Doesn't matter what you pull up. I was looking at the Aussie earlier on today, and this is the current chart, as you can see. You know, it's yeah, May's chart, so it's not cherry picked or anything. And with Fibonacci, what you're essentially looking for mainly is something that's a sore thumb, something that just sticks out, and you can clearly see it. Like here, for example, you can see a drive up and then wallop, it's fell off the cliff. Okay, so that's a clear directional move that anybody would spot immediately. You know, you could even say this one here as well, because again, it's a clear move up, bit of consolidation, and then thump down it came. Okay, and what you're mainly looking for is a retracement from that move. Okay, so if your overall thesis is long, as this you can see, it's moved up, it hasn't gone to new lows, it's bounced around, and it's meandering its way up. Okay, that gives you a good theory as to what you can do, because in this situation you're going to be buying up to a 50%. However, if it was the other way around, you could sell at the 50% for a downward move, because you want to be trading with the dominant direction all the time. And as you can see here, it is a dominant direction long. And the way to draw it is simple. Okay, you draw it in the direction of the move, like so. Okay. Now I go wick to wick, unless it's an excessive wick, and then I'll go body to body, but I'm mainly wick to wick. But if you're going body to body, stick with it. Always stick with your same criteria. I just use wicks, and it's personal to me. You might like to go body to body and tighten it up a little bit. Okay, so we've got that, and if you pull it across, any strong directional move, a good 80% of the time, will retrace back to 50%. So there's your move down, and it's clipped the 50%. Okay, I'll tell you what, I'll put a highlighter on my mouse. There we go. All right, so there's it's clipped the 50%, you know, and then down, and then carried off back on its journey. Okay, now what you can also do is, now you know you were buying that up to 50%. Voila. Okay, you'd have taken your profit and pulled it into break even, because I certainly would have done, because my first order is always account preservation. Whatever happens, I protect my account, and it's retraced and probably stopped you out. All right? But you're being paid if you stack trades like what I do. Okay, but either way, even if you weren't paid and you just pulled it into break even, you're still safe, and you get another go down here. But you might want to know, well, how far is this going to move? You know, I know it can go back to 50% because it will try and retest that level. And, you know, it's a good level because you can see it there. It struggled at that point before. Okay, you can use an extension. Okay, and the key levels that you're looking for is 127.2 and a golden ratio number, which is 618. Okay, and as you're going through the levels, it becomes 161.8 because it's 61.8 above the 100%. And sure enough, there it is there. It's respected fantastically. And it's uncanny how often it does it. And if you look at the way these have been made up, this set of candles, you've re-entered the market down here because it's a nice level and you've bought it somewhere here. It's gone up to the 127.2, stalled. Could be coincidence because it was the end of the candle's time, right? But then carried on up here. But when it returned, it stopped at that level. And you can see it, it's come and it's stopped. It's gone back to the 161, thought about it, came through, returned to that 127, back down to this area, which is the level at the top of the 50%, and then it's danced back round on the same levels again. So you can see they're made up and they're quite strong. Now what you can do is they can set them as profit targets very easily. So you're looking to get in down here at the end of the move, and you can see it. There it is there, and you can see a nice W forming as well. Okay, there's your trigger candle. That's letting you know that that has come down to an area of interest, support and resistance area. It's bounced off it strongly. The market is moving up because you've already identified that. So you've already got your clues that it's been there before, it's retested it, it's going to come away. You know, there's your first target at 100%, which is equal again to that 50%. Second target, third target. So out of that one little piece of market structure, it's give you key levels, it's give you 3 target areas, all just off that. Very simple, you know, and that's all made up without any indicators on here at all. You know, it's just reading the chart as you see it. And that's what you're looking for. So step 1, you would look for a strong directional move, you know, against the greater trend. So it's that. You're not looking to trade that. You wait for it to end, and the way you know it ends is with that, you know, even here, because you can see long wick to the bottom, body to the top, and it's green. So that tells you pressure up. Strong momentum to the upside is the other clue. So you could draw your fib in here, okay, and you could do this. All right, just to quickly go through it again. You can go, right, I am not going to enter the market before 23.6. Okay, so what you do is you draw that in there. You will not enter before this line, all right, which then gives you time to be able to watch the candles and make certain that's as low as it's going to go. All right, because what you're looking for, strong directional move, no new lows, it has to retrace. You see that candle, you think, yeah, I'm ready to rock and roll. You see this one, indecision, so you hang fire. That one breaches the 23.6, stays green. Think, right, okay, we could be on for a play. Put your order just above that wick. So in order for that order to be triggered, the market must move in the same direction. Triggers straight up to 50%. All right. And that would be, if you caught it there, onto the 50%, that is 50 pips. that is a good, easy trade, making 50 pips to the 50%. Soon as that hits that, you are at break even. Personally, I'd have been at break even prior to that, because as you've seen, the way I trade, I have stacked orders. So I'd have caught all of that 50 risk-free. The market would have reversed back to where it came from, down here, took me out, not bothered, being paid. But then I'd be looking for clues for the next trade. And the next trade is this one. Okay. Now, I've already decided that the dominant movement is long. So I'm now not looking for a retracement. I'm looking for an extension. And I'll use a Fibonacci again. Except this time, instead of using this leg, I'm now using the leg that I've just traded, which is this one here. Okay. And I get an extension. I know where the low is, and I know where the high is, because it's clearly defined in front of me. Pull it back to where it came from, pull the levels across. This now gives me clear target points. Okay. And the principle is exactly the same. I am not going to get in before the 20% or 25, 23.6, whatever you happen to have on your Fibonacci. When I do an extension, I break it into quarters. So I'm not going to get involved before here. I will see the market come down, stall, see that move up above this, think, yes, okay. Principle is the same. I will put my order in a tick or two above the candle. So again, the market must come to me. My first target point can be 100%. The next one will be the 127.2. And finally, the golden ratio number, which is here. So from that little leg here, it again has defined a trade for me just by watching basic market structure. And if you have a look at the way the price responds to those levels, it's based on this. Yes, it blew through that, but it stopped on the 127.2. Could be coincidence because the candle would have timed out at that point. But went straight up and stopped dead at the golden ratio number. Danced around that a bit. But when it came down, it tried to push back into the 127. And when it did, it danced round it before it came back down to the 100%. These are key levels. And as it moved, it came down, had a good go. Because if I put a leg onto this, I'm pretty sure that'll hit the 50%. So let's have a look. Because that's a strong move up. There's a strong move up. Wick to wick. Cross. What do you know? Straight on 50%. There it is there. Time and time again, guys. I wouldn't try and catch each wave. It's very dangerous because no system is perfect and nothing works 100% of the time. Stack the odds in your favor by looking for the dominant trend and then trading with it. Okay? So you will be trading into the 50%. Watch it retrace away from the 50%, back down to the 100 or zero, if you want to call it zero, you know, ground zero starting point. Draw an extension on that 50% that you've just made. And then when this W pattern is formed, that is there, it'll tell you how far it's going to get. And Fibonacci is as simple as that. It really is that simple. try and use it with another indicator just to back up your theory. Don't go happy mad. You know, put an RSI on, and if the RSI is pointing up, you have a premise of up, and you've found an area of support and resistance, and the price is respecting that. It's tick, tick, tick all along, and you'll be fine. So just keep it simple, guys. So there you go. I hope that kind of answers your question. I use this every day. I think it's a perfect tool, and it's ideal for setting targets. Okay. So with all of that, I'm going to enjoy the coffee, because we all know Scruffy likes a coffee, and especially when it's in his Star Wars mug. Thank you for sending me that, by the way. I still really appreciate it, and as you can see, it's still on my desk. And that's it. So I'll leave it there. If you like this, please subscribe. I'm genuinely trying to put trading in the real world and just give you a little bit of inspiration that it is possible. And that's what the channel's all about. So I'll sign off and leave it. So remember, guys, do what you love, money will follow. See you all in the next one.